Dragice, možemo da počnemo? Dame i gospodo, predstavnici medija, moji dragi saradnici, predsjedniče Saveta, mi smo u uobičajenom sastavu. Tu je gospođa Mira Miletić iz Sektora za ekonomske istraživanja i statistiku, Nikola Dragašević iz Sektora za monetarne i devizne operacije, viceguverner Ana Ivković, gospodin Savo Jakovljević iz Sektora za ekonomske istraživanja i statistiku i vaš i naš omiljeni Milan Trajković, takođe iz Sektora za ekonomske istraživanja i statistiku. Dobrodošli na prezentaciju novembarskog izveštaja o inflaciji i uobičajeni scenario je da vam ja kroz svoje uvodno izlaganje predstavim naše najnovije projekcije. Vi ćete ih posle mog izlaganja dobiti, taj govor, sa grafikonima, nakon čega će Savo imati svoje izlaganje, a onda će Mirjana da predstavi par posebno zanimljivih osvrta za vas i za ukupnu javnost, a onda smo otvoreni za sva vaša pitanja. Na samom početku želim da naglasim da se najvažnija razlika između projekcija koje danas predstavljamo i projekcije iz avgusta odnosi na
from August pertains to the materialization of risks to which we pointed at the time, though hoping that it would not occur. The first risk that has materialized relates to developments in the international environment. Geopolitical tensions have deepened further. The gas supply from Russia to Europe has contracted by as much as 80% compared to the previous year. Global inflation continued on the upward path, and the degree of monetary policy restrictiveness of many central banks has increased significantly. All of this has resulted in a less favorable global growth outlook, and, most importantly for us, it has reflected on growth in the euro area as well, and the euro area is our key economic partner. Prices in the international environment are still the main generator of inflationary pressures in Serbia. In the period since our previous report, we have seen that global inflationary pressures are stronger and more persistent than anticipated, although almost all central banks tightened their monetary policies more than expected, and energy prices decreased. Global inflation at such a high level has not been recorded for decades. According to Eurostat's preliminary flash estimates, in the euro area in October, it touched the historic maximum of 10.7%, with Germany recording inflation of 11%. It would seem that the higher global inflation is largely attributable to bigger than expected indirect effects of the prices of energy, primary commodities, and industrial and agricultural raw materials. In addition, inflation is driven by the still pronounced imbalances between supply and demand, higher inflation expectations, and pronounced uncertainty in commodity and financial markets. To this, we should also add the tight labor markets in many countries, as well as the still relatively high transport costs and bottlenecks in global supply chains, which, though easing, still generate significant cost-push pressures. The leading central banks and international institutions forecast that inflation will trend above the long-term average and above the target level during both 2023 and even 2024, while its return to the usual inflation level across the world is expected not sooner than 2025. High inflation has led to the tightening of global financial conditions, not only because of higher interest rates, but also due to the fall in asset prices and the strengthening of the US dollar. According to Goldman Sachs Global Financial Conditions Index, the availability of financial assets in the international market has deteriorated and is at the same level as during the global economic crisis of 2009. Following suit, the IMF estimated that financial conditions for the majority of countries are already similar to the ones in early 2009 or in the first phase of the pandemic in April 2020. Due to the worsening of financial conditions, emerging countries' presence in the international financial market has almost halved, as has the borrowing in hard currency during 2022 relative to the previous year. Concurrently, financial conditions in the local currency have tightened, and one of our text boxes in the inflation report covers this issue and shows that financing conditions have been tightened not only for Serbia, as some analysts and politicians often want to interpret, but for all countries, especially emerging ones, including Central European countries such as Hungary, the Czech Republic, Poland, Romania, and others. Efforts to ensure the best possible financing conditions for Serbia in the coming period have driven us to request a standby arrangement with the IMF, whose planned funds of around 2.4 billion euros would provide additional support to financing in the challenging international environment, as well as the implementation of structural reforms with a particular emphasis on the energy sector. The tightening of global financial conditions will result in lower global economic growth. Global growth is already slowing almost everywhere, with concerns over the effects of the energy crisis, as well as geopolitical tensions and the crisis in Ukraine. Risks that the effects of the Ukraine crisis will spill over are still high, especially in terms of gas delivery, which is primarily reflected on the euro area economic activity, notably that of Germany, which is among our key trade partners and is forecast to go into recession the next year. Such headwinds in the international environment considerably affected our domestic macroeconomic movements and the National Bank of Serbia's monetary policy decisions. The second risk that has materialized since August to date pertains to the agricultural season in Serbia and certainly the wider region. The drought in the summer months and most likely the lower amount of used fertilizers than optimal, which is a result of their prices going up several times, had a bigger adverse effect on this year's agricultural season than what we assumed in August. Back in August, we assumed that this year's agricultural season would be similar to last year's, whereas now we estimate that it will be weaker than last year's by around 8%. And the preliminary data of the Serbian Statistical Office on contracted output of wheat and some autumn cultures substantiate our estimates. With the prices of mineral fertilizers still trending very high, for the first time, we have assumed that the next season will also be below average. The materialization of these risks, which we underlined in our previous reports, reflects on our projections of key macroeconomic indicators for Serbia, which are now closer to the alternative scenario from the August projection. In the remainder of the conference, we will present our latest projections and the underlying assumptions. In the third quarter, inflation in Serbia moved in line with our expectations presented in August. Still, almost two-thirds of the contribution to year-on-year inflation continues to come from elevated food, and energy prices. However, in our August projection, we expected inflation to peak most likely in September this year, but due to the surge in global energy prices in the past months and their continued spillover to imported inflation, together with the effects of the drought at home and in most of Europe, domestic inflation continues to climb past our expectations to 15% year-on-year in October, reflecting the materialization of the above-mentioned risks. All central banks, including the National Bank of Serbia, base their projection on similar assumptions of movement in the global prices of energy and other primary commodities, relying on the assessments of relevant international institutions and the movement in market futures for the coming period. Since it is precisely the global prices of energy and primary commodities that departed significantly up from what international institutions and futures expected under the impact of several intertwined shocks during last and this year, inflation in all countries proved to be stronger and more durable than anticipated. One of our text boxes from the November inflation report deals precisely with this matter and suggests that the above factors have resulted in similar departures of inflation outturns from inflation projections of other inflation-targeting central banks in the region, as well as the European Central Bank. Elevated imported inflation has also fueled a rise in core inflation, namely inflation excluding food, energy, alcohol and cigarette prices, which measured 9.5% year-on-year in October. It is, however, important to note that core inflation remains well below headline inflation, but also lower than core inflation in some countries of the region pursuing the same monetary policy regime. A powerful deterrent of stronger core inflation growth is the preserved relative stability of the dinar exchange rate, even in the conditions of globally heightened uncertainty in the international financial market. Under the November medium-term projection, headline inflation will remain elevated until late this and early next year, but it will strike a downward trajectory thereafter. Inflation is expected to decline more sharply in the second half of 2023 and retreat within the bounds of the target tolerance band in the second half of 2024. Inflationary pressures will be soothed by past monetary policy tightening, anticipated waning of the effects of global factors underpinning energy and food price growth in the past period, and subdued external demand amid unfavorable global growth prospects. Though they remain volatile and much higher than a year ago, the global prices of oil and other primary commodities, as well as industrial raw materials, have been drifting down over the past months in the face of stronger recessionary pressures worldwide, while supply chain disruptions are easing as well. In September and October, the global prices of natural gas, coal and electricity also subsided, helped by favorable weather conditions and higher than anticipated storage levels in Europe. Our decision to continue tightening monetary conditions at home was due to lingering global cost-push pressures and the persistent rise in imported inflation. We have been tightening monetary conditions continually but gradually since October last year, taking into account the fact that inflation in Serbia is mostly determined by cost-push pressures from the international environment, which are entirely, or for the most part, beyond the influence of the National Bank of Serbia's monetary policy measures. Since April this year, we raised the key policy rate by 350 basis points to 4.5%. Interest rates on deposit and lending facilities were increased likewise to 3.5% and 5.5% respectively. By raising its interest rates further, the National Bank of Serbia is seeking to contain the second round effects of rising global food and energy prices on other prices in the domestic market through inflation expectations, as well as to ensure that inflation strikes a downward path and retreats within the bounds of the tolerance band until the end of the projection horizon. The National Bank of Serbia's monetary policy tightening has spilled over to interest rates in the markets of money, loans and savings, confirming the efficiency of the monetary policy transmission mechanism through the interest rate channel. The normalization of the ECB's monetary policy and the resulting rise in money market rates in the euro area has reflected on higher interest rates on euro-denominated loans in the domestic market. By maintaining the relative stability of the dinar exchange rate against the euro, the National Bank of Serbia has greatly helped contain the effects of the spillover of higher import prices to prices at home in the conditions of elevated global uncertainty. In the year to end October, the dinar gained 0.2% against the euro in nominal terms. And since May to date, the National Bank of Serbia intervened in the interbank FX market by buying 2,705 million euros net. In that way, we offset the entire amount of foreign exchange sold in the first several months of the year, specifically in the first 4 months. And as a result, since the start of the year, FX purchases exceeded FX sales by 435 million euros. Financial and overall macroeconomic stability is also underpinned by the National Bank of Serbia's FX reserves, which at end October stood at 16.9 billion euros, which is their highest level to date, despite a multidimensional global crisis. This created an additional buffer against the external shocks to which we have been exposed for almost 3 years now. Though the cost of borrowing has gone up, the approval of corporate and household loans continued in the third quarter at a similar pace as in previous quarters. The 11.7% year-on-year rise in bank lending in September continued to be supported more by corporate loans, which gained 14%, while growth in household loans slowed to 8.3%. The share of NPLs in total loans fell to a new record low of below 3.2%, which is the new lowest level to date and is 1 percentage point lower than before the pandemic. Such developments indicate that bank asset quality has not deteriorated even after the government economic support measures were unwound, and it does not pose an obstacle to further lending growth. After posting relatively high growth of around 4.1% year-on-year in the first half of the year, economic activity slowed down in the third quarter. According to the preliminary estimate of the Serbian Statistical Office, Serbia's third quarter GDP growth equaled 1.1% year-on-year. The economic slowdown reflected this year's agricultural season, which was much worse than assumed, judging by the first estimates, dented external demand, and the continued rise in corporate costs, weighing primarily on lower activity in construction and manufacturing. Also, activity in the energy sector continued down due to the low river water levels. Taking into account the sharper than expected economic slowdown in the third quarter, the Serbian GDP projection for 2022 was adjusted down relative to what we expected in August to the range of 2.0 to 3.0%. As already pointed out, the growth rate was revised in the light of the materialized risks we identified in August, namely, as I have said, the underperformance of the agricultural season, the interruption in Russia's gas supply to the EU. In the new GDP projection, domestic demand is still expected to provide a positive contribution, while the contribution of net exports will be negative due to the high energy imports, primarily in the first half of the year. As economic activity in the euro area and other countries, which are our important trade partners, is expected to weaken notably next year, while the carryover effect from this year will be smaller, we have also revised Serbia's GDP growth projection for 2023 also to the range of between 2 and 3%. Assuming a considerable reduction of geopolitical tensions and a recovery of external demand, as well as the planned implementation of investment projects, notably in road, railway, energy, and utility infrastructure, economic growth is expected to pick up as of 2024, first to around 3.5%, and then to return to its pre-pandemic growth path of around 4% per annum in the medium term. The current account deficit to GDP ratio is expected to measure around 9%, both in this and the next year. This year's higher current account deficit mainly reflects elevated energy import, largely because of the price upswing in the global market. On the other hand, though external demand slackened, goods and services export reached high growth rates, approaching 32.2% year-on-year during the 9 months of the year. And this is mostly owing to past investments, which resulted in a positive contribution of all manufacturing and metal ore export sectors, as well as owing to higher export prices. According to our estimate, the balance of payment trends next year are likely to reflect not only energy import, which will certainly remain high, but also a contraction in external demand due to the expected slowing of economic growth in our key trade partners. In the medium term, a continued rise in export capacities, along with the expected wearing off of negative effects of external demand and unfavorable terms of trade, should contribute to a gradual decline in the current account deficit and the preservation of external sustainability. External sustainability will also benefit from the continued relatively high inflow of FDI to Serbia, projected at around, according to our very conservative projections, 3.8 billion euros this year, which is more than we previously anticipated and more than we previously projected. It is also important to note that, according to the first estimates, FDI inflow in the first 10 months of the year reached almost 3.5 billion euros, thus exceeding the level from the same period of 2021, which was a record year in terms of FDI. The FDI inflow remained geographically dispersed and mainly channeled to tradable sectors. Ladies and gentlemen, dear colleagues, uncertainty surrounding the inflation and GDP projection, which we have just presented, is still largely associated with factors from the international environment, primarily the impact of the Ukraine conflict on the availability and the world prices of energy products, as well as the global growth outlook, which will largely influence international prices of primary commodities. At home, the risks to the projection are mainly associated with the outcome of the next agricultural season, which we assumed for the first time to be below average. Also, the achievement of the projections will depend on the speed of the recovery of the energy sector, FDI inflow, and any additional measures the government might take in order to safeguard the living standard of the most vulnerable population categories in the period ahead. Overall, risks to the GDP growth projection for this and the following year are judged to be pronounced but symmetric, while risks to the inflation projection are also pronounced but tilted to the upside. Depending on geopolitical developments and movement in key inflation factors, both from the domestic and international environment going forward, the MBS will estimate if there is a need to tighten monetary conditions further and to what degree, taking into account the effects of past monetary policy tightening, as well as the time needed for these effects to fully play out. The National Bank of Serbia's monetary policy priority will continue to be the delivering of price and financial stability in the medium term, since in that way it also contributes to sustainable economic growth and, by extension, to a further rise in employment and favorable investment environment. We believe that sound macroeconomic fundamentals and ample FX reserves will help us counter the effects of the current energy crisis and globally tightened financial conditions. We also hope that, thanks to the responsible conduct of economic policy, both globally and at home, the risk of a prolonged inflation, such as the one the world faced during the previous energy crisis of the 1970s, will be avoided, though the current energy shock is probably even stronger. In the remainder of the conference, we welcome your questions. Just one more sentence to finish with. The state of affairs is not too bright, but not so dark that people joining their efforts together are not able to overcome all problems that they may face. My generation, who has survived the inflation from the 1990s, we have experience enough to say that no matter how difficult it is, we must continue working in order to live better. I firmly believe in this, and I count on all of us working with the same goal in mind. Now I give the floor to Savo Jakovljević.
Thank you, Governor. I would like to give you several details regarding the inflation projection and the key differences between the previous projection and the current one. I would like to explain the factors that have led to a somewhat higher projection relative to what we had in August. Just like the Governor said, we have seen the materialization of risks identified in August. These risks related primarily to developments in international financial and commodity markets and to the further escalation of the conflict in Ukraine. At the time, we emphasized that in the alternative scenario, we have developed there was a possibility of a cutoff in Russian gas supplies to Europe, and this practically materialized because these procurements have been minimal in recent months. This is what additionally pushed energy prices, primarily in the euro area and in other countries with which we trade extensively. So through energy prices, producer prices rose. Over the past several months, producer prices reached record levels in the euro area, and this spilled over to the prices of the majority of products that we import, both on the prices of raw materials and finished products. Serbia is an open economy, and developments in the international environment largely impact Serbia. And just as we raised our exports, we export a lot of products, but we also import a lot of products. And this is what affects inflation. I would like to remind you that inflation in the euro area amounted to 10.7% in October. This is beyond expectations of the European Central Bank and of other financial institutions, which only proves that inflation is more persistent in the euro area and that it is running higher than anticipated. This is what is our initial assumption for inflation next year. In August, when we made our projections for the euro area, we envisaged 3% inflation in the euro area, and now for 2023 we expect it will reach 6%. It will average 6%. The latest forecasts of the European Commission released on Friday says that the average euro area inflation for the next year is 6.1%. So this is identical to our assumption. And there is also another source that is relatively flash, consensus forecast. Professional analysts give their projections here. And their expectations of Eurozone inflation for 2023 is 6%. Also, countries in the region that we trade with extensively are running higher inflation than expected. In some countries, it even exceeded 20%. In some countries, it stayed at the levels of 17 to 18%. But this is still significantly higher than what their central banks envisaged. Also, electricity prices represent an international factor. In the international market, these prices went up, and this spilled over to their domestic counterparts. Producers pass increased costs onto consumers. As the governor said, when it comes to risks in the domestic market, but this relates also to the major part of Europe, this is agricultural performance. We had drought during the summer, but this was factored into our projections in August. But agricultural performance turned out to be worse than projected. And this is something that we had to factor into our new projection. Basically, since the start of the conflict in Ukraine, we have seen many revisions in projections of central banks worldwide. This is only logical because uncertainty is running high, the risks are huge, and they are materializing to a certain extent. And in terms of some assumptions, we are now much closer to the alternative scenario we developed in August. I mentioned the European Commission. In the last round of its projections for the next year, they released these projections during the summer. They expected inflation of 4.3% in inflation. Now they project it at 6.1%. We're talking about an increase of half the amount projected. Since August, we have seen the third quarter where we had inflation that was at the level projected. So average year-on-year inflation equaled 13.3%. and in the August report, we envisaged it at 13.5%, so actual inflation was turned out to be even lower than projected in August. There were four factors behind our upward revision of inflation projection for the coming period. This is a more persistent inflation in the euro area, elevated prices of energy prices. They did start declining, but they still remain significantly higher. The spillover of these prices onto other prices. And the fourth factor is the drought, which turned out to be worse and which reflected on the prices of some vegetables, where we have seen an unusual hike, especially in October. Such as the prices of tomatoes, paprika, and others. So this will be everything I had to say regarding the inflation projection. Now I will hand it over to Mira. We will present some of the text boxes in the November inflation report. The governor already mentioned the key findings of some of these text boxes, and I will try to give you some more details. The first text box analyzes the factors behind the deviation of actual from projected inflation in Serbia in 2021 and 2022. As you can see on this slide, several inflation components for different groups of countries are presented here. We're talking primarily about European countries. In September this year, the year-on-year rates of these categories, and the categories that boast the highest growth rates are food and non-alcoholic beverages, then rents, housing, gas, electricity, and other fuels. And the third category is transport. So these three categories are most vulnerable, most sensitive to energy and food prices. This means that the common denominator for all these countries and for inflation in these countries was the growth in global food and energy prices. Of course, there were some differences across countries. Somewhere domestic demand and labor market conditions also played a role. But what was the key determinant of inflation in all these countries were food and energy prices, and actually the shocks in the international markets that we faced since the start of the pandemic onwards. What we analyzed in more detail within this text box is that we've monitored our projections from November 2020 onwards, and we have explained the assumptions underlying our projections. These are external assumptions as they relate to global oil prices, global primary agricultural commodity prices, and you can see that our assumptions were based on the estimates of relevant financial institutions, such as the IMF, World Bank, consensus forecast, and also of market futures for these commodities. And what the projections of these institutions and market futures indicated was that there was going to be a decline in these prices. But what happened was quite the opposite. These prices increased under the impact of the pandemic, of the energy crisis, which erupted in October last year, and then the conflict in Ukraine only built up on it. When it comes to the euro area, the euro area is our key trade partner. And what matters very much is inflation for Serbia, because imported inflation has been trending at a much higher level than indicated by ECB projections and the projections of other relevant institutions. So if we take a look at the deviation of actual from projected inflation, which you can see in the lower left chart, around 50% of the deviation is attributable to external factors, external assumptions, oil prices, inflation in the euro area, but also when it comes to the rest of the deviation, this relates to the indirect effects of surging global oil prices onto producer prices, then supply bottlenecks and other cost-push pressures. This means that in such an environment, it is difficult to make any projections, and what happened is that these shocks could not have been foreseen, and that is why inflation turned out to be more durable and more persistent than projected by the majority of central banks. This is the key finding of text box 1. In addition to this text box, we also have a text box which analyzes the tightening of global financial conditions. The tightening of global financial conditions reflects primarily on higher interest rates in the international financial market. Secondly, there is a drop in asset prices. And third thing is that due to the Fed's faster tightening of monetary policy relative to other leading central banks, the dollar appreciated quite strongly. And the key consequence of tighter global financial conditions is the rechanneling of portfolio investments from emerging market economies to advanced economies, and the tapping of international financial market by emerging market economies is on the decline. Borrowing in hard currency is also on the decline. Financial conditions are tighter for most emerging market economies, and this is what the governor said. This is not something that Serbia faces alone, but all other emerging economies as well, and you can see this on this chart in the middle of the slide. If we take a look at Serbia in this context, several aspects should be taken into consideration. Serbia's public debt is currently at 53.7% of GDP, according to September data, because as a result of tightened global financial conditions, emerging market countries are facing difficulties in the repayment of their debt, so their interest expenses are increasing. And according to the European Commission forecast mentioned by Savo, the share of public debt is going to decline further going forward. The share of the dollar in our public debt has been reduced from 34% in late 2016 to around 12.5% in September this year. So on these grounds, we do not expect any major negative effects. And what is also very important for Serbia is the high level of foreign exchange reserves, which are a sound pillar and a good buffer against risks from external shocks. If we also take a look at the share of Serbia's public debt and compare it to public debt levels in other countries in the region, only a slightly lower of public debt in GDP has Bosnia and Herzegovina. All other countries have a higher share of public debt in GDP. I would like to present another text box where we presented a new indicator of the strength of inflationary pressures. This is the so-called inflationary sentiment. We use the so-called text analysis, where we analyze around 120,000 articles from the economic sections of 4 Serbian dailies. And we try to pick up, we try to capture terms related to price rises, to inflation, and to price falls within the total number of words, and we constructed an indicator of inflationary sentiment. In times when the share of price rise related terms is frequent, these are precisely the periods when inflation is higher. I'm talking about 2008 to 2012 and the current period, which means that this is a good indicator for assessing the intensity of inflationary pressures in our country, and this is something that the MBS will rely on in the future as well. And this would be everything I had to say about the text boxes. If you have any questions, we'll be happy to answer them.
Before the journalists start with their questions, because Mira mentioned how much we contracted the amount of dollar debt in the total debt to only 12.5% from 34.6%, I would like to ask Nicola to share with you how unpredictable and maybe inexplicable are some tendencies in the ratio between the dollar and the euro, for instance. These days they have become almost equal, so I'd like Nicola to familiarize you with that briefly. It's interesting in the context of the conditions which we take into account and on which we can count. Thank you, Madam Governor. Just like the Governor said, the circumstances in the international environment are completely unpredictable, and the best proof is the ratio between the dollar and the euro, which are the most traded currency couple in the international market. And we know that since May last year, it recorded, we had a strong appreciation of the dollar from 122 to below 1. So on the 27th of September, the dollar was the strongest in several years, maybe even the several decades. So I'm talking about the dollar vis-à-vis the euro. It's 0.9582. And we recorded the weakening of the euro by more than 15%, specifically 15.8%. But since end September, we have seen somewhat stronger appreciation of the euro against the dollar, which was particularly pronounced in the past 10 days, maybe since the 3rd of November, and it stands at more than 6%. What is the main reason? Better indicators regarding inflation in the USA, namely lower year-on-year inflation than expected, and the market perceived this immediately and valued it as if the Fed would slow down its monetary policy tightening pace, actually that it would continue to tighten its monetary policy, but to a lesser degree than before. We know that in the past meetings it was by 75 basis points. Several more factors in the international environment, such as developments in China, the situation with supplies of European storage facilities with gas, which the Governor mentioned. So there are no major factors that could indicate such a strong appreciation of the euro, except the perception of the financial market. And we can say that some players in the international market are suggesting that the euro has got stronger even excessively, and then going forward we may expect some revisions and adjustments. To what extent this will be materialized, we can't say, because many factors affect the ratio between this currency couple. As the Governor said, everything is unpredictable. Savage from Bloomberg Agency. A question about the FX market. In this time of the year, because of a demand for energy sources, there is a high demand for FX, namely a higher supply of the dinar. At the same time, we have relatively modest volumes of sale of domestic securities. So this all indicates increased demand for the euro, but in the IFEM we see a completely an opposite situation. Month after month, the volume of interventions of euro purchase is rising. So could you please explain the factors that contribute to this, and how would you explain this mystery? Well, we are all aware that we live in unpredictable circumstances in which what you say, what is usual for a certain period of the year, now has become unusual, because Milan can give you more specific data, because some reserves of energy sources have been created. So since the start of the year, when we had somewhat elevated FX demand because of the payment for energy, we had a drastic surge in FX demand because of the creation of those inventories, because the prices were more favorable at the time. More than 2,270 million euros was the outflow at the time, and this was mostly the result of the increased price and increased purchase of energy. And we also had what we should not forget, we had the creation of an artificial shortage, tales of artificial shortage of FX, because you will remember, because of the elections, we had those headlines about long lines in front of exchange dealers, but we never saw a picture of that, just some archive photos. But even then, we came out to the exchange dealers and banks to meet the increased demand. And when everyone saw that there is enough FX, the demand dampened and subsided. The contribution of the National Bank of Serbia to this is the stabilization of the market, both in the FX market is reflected in increased supervision, which we never stopped with. When we took on the role of the supervision of exchange dealers, we wanted to see how much the law is applied, how much these dealers are guided by their own selfish interests, and how much they create some feelings of insecurity. When the demand for energy increased somewhat after a while, since May, we also managed not only to offset the FX that we had sold in order to prevent the excessive strengthening of the dinar. I emphasize this on purpose because I want to respond to objections about the artificial strengthening of the dinar. Let me tell you that in this year, which had what we call the multidimensional crisis, when we are 435 million euros in surplus, in addition to all of these expenditures that we had to buy FX, to buy energy, the dinar would have been even stronger. How can we maintain artificially its value if the value of the dinar is dictated by the supply and demand for FX? The supply of FX is to one part attributable to increased number of tourists. We have had a record high tourist season and inflow on account of credit cards that this year amounts to 732.6 million euro in 2022. Have you heard what I said? More than 700 million is the inflow from tourists that use their credit cards to pay in Serbia, and this is recorded as FX inflow. And if you take into account that we still have export, even though some belittle the export that we have, we still have a significant inflow from export. You have the figures that this has increased since last year, month on month. 32.2%. So this is all FX inflow that we have collected in the FX market by our active participation in such a way that we do not allow excessive strengthening of the dinar vis-à-vis the euro, both in this part of the year when we usually have increased energy purchase. But we now have an unusual year, we have unusually warm weather, but we also have, as they say, almost gas storage facilities full to the brim, and facilities of other energy sources as well. So this is the key factor I almost forgot. We got into a custom of talking about this so often. We have an inflow of foreign direct investment. Portfolio investment is not so important because the entire region, logically, the capital from the region, like a bird migrating across the ocean. And so we have a sharp rise in profits. So now we have around 100 million euros in portfolio investment. Everything else of the figure that I mentioned, 3.5 billion in 10 months, this is the inflow of FDI in the real sector. This FDI inflow of 3.5 billion that we conservatively estimate at 3.8 billion. If it only continues at the same pace as in these first 10 months, we will certainly exceed the figure of 3.8 billion. What does this mean? Timely purchase of energy sources, creation of a favorable environment, business environment in Serbia, and the fact that none of us that are economic players and policymakers in Serbia, we do not panic and we do not think that the world will stop. No, the world must keep moving. The factories must keep working because this is what helps preserve jobs, pay out salaries, fill up the budget. And by filling up the budget, we also have guarantees of contracts, security, we have the education system, the health system, and everything else that is within the competence of the government. I only mentioned a few inflows that helped that have made it possible for the MBS to have 9.6 billion euros in FX reserves today, and this is sufficient guarantee that we can respond to any shocks that may blow into our faces. And what we have talked about with the IMF, we are bringing the talks to the end. We expect the Board of Directors to meet in December and to prove the standby arrangement of 2.4 billion euros is proof that we are taking into account all alternatives to create buffers for times of crisis when exiting the international financial market is not favorable because of the anticipated high rates that no one wants to pay unless they really have to. Why would we go into the market? Although we are getting ready for €1 bond, we are talking about this with the Ministry of Finance. We will go to the interbank FX market, but why would we pay high interest rates, and such as Romania and some EU countries are paying now, and the rates run between 7% and 8%, if we can have this standby arrangement from the IMF at rates of 3 or 3.5% based on our membership quota and based on the achieved and proven renown in monetary policy conduct from 2014 onwards, when with the responsible fiscal consolidation we showed that we are responsible in our policy conduct. When could this transpire? Well, we are doing this together with the Ministry of Finance. Maybe I've even said more than I should have. This is all in a stage of consideration. But citizens should know that the state, and when I say the state, I mean the executive authority, I mean the National Bank of Serbia. We are all contemplating and considering all alternative scenarios that imply possibilities of procuring funds. we have the agreement with the IMF, and we have almost finished negotiating about it. But it doesn't mean that we will use the whole 2.4 billion euros. We discussed this figure, but whether and to what amount we will use these funds, it will depend on the needs that the government establishes, and the National Bank of Serbia, in this case, is just an agent. And this time, it is an entirely specific arrangement because it's not used for boosting FX reserves. We already have a record high FX reserves, but this is a specific instrument of direct budgetary support in times of crisis caused by shocks that are unfolding in the world. And us, being a small and open economy, this channel of openness is best seen through financial market and financial flows. So when they say imported inflation is 2/3, yes, it is. Even Madame Christine Lagarde has said we cannot copy the Fed's measures, and she's completely right, because Europe is different and specific in terms of its growth outlook, in terms of the conditions prevailing in Europe, and not to mention how specific Serbia is. So in this sense, we are in a situation, literally, without any fault of our own, we are in a situation where we find this monster called inflation, and this is the consequence of monetary policy that was conducted from 2008 until COVID. So I'm trying to answer your question with a sentence that's most important for me today. The expectations of those who think that the state should and could resolve all of their problems, personal and individual, is just putting off and allowing the problem to amplify, and which all leads to a boomerang effect. I'm talking about the moratorium on loans because of the high inflation. We all know that inflation is part of the legal process of the cycle that are cyclical, that repeat, and that had to ensue after an accommodative monetary policy that was pursued, with various instruments, with zero rates, with negative rates, with quantitative easing and cheap money that was available aplenty and that spilled over onto the financial market. So this simply had to happen. In contrast to the COVID, which made everything in the world come to a halt, from airplane transport to commodity transport, where direct victims were human lives. This means that this is simply incomparable of requests for the moratorium on loans, and especially the expectations that the National Bank of Serbia, who does not own banks, not even those that we say domestic banks, conditionally, but I mean, none of the banks doing business in the Serbian market, we do not own them, but the relations between clients and banks are a matter of their contractual relations, and clients who are facing difficulty in loan repayment should go to their banks and agree with them on any possibilities in terms of facilities. And the only thing that the National Bank of Serbia could do in such a case is, for instance, if there's a creative solution, then in the part of our regulatory facilities, we could help banks make this happen. But I say only in cases where this is really justified. Because what does it mean to pass a decision on a moratorium because of inflation? It means putting off the payment of installments, but you have to have banks functioning, so the interest would have to be paid. And we have done that together with the government for agricultural producers. But Can we really suppress inflation by passing such monetary policy measures and by tightening monetary conditions, by lifting the key policy rate, if at the same time we are releasing a part of money that in turn fuels inflation and stays in the system by increasing demand? So we have to pass consistent measures. And if we speak about the tightening of monetary conditions, we cannot do this with one hand, just pull with one hand and give with the other hand. This would lead to no results, and it would be irresponsible on our behalf to do such a thing. And the National Bank of Serbia, I repeat, does not own the banks, and it cannot pass such decisions. We need to talk, like we have talked before, like we have discussed the unjustified increase of loan processing, account processing fees, about the irresponsible behavior in terms of the exchange rate between the dinar and foreign currencies, and we control that. We have done that, and we will continue supervising that. Just like when the MTPL insurance was increased without an agreement with the MBS. So we stopped that, and all the charges and increased in the prices of around 22% that was unjustifiably collected was repaid. So I would love all the participants in our lives to think whether it is only banking margins that we need to discuss, or maybe some other trade margins, or maybe margins in the construction industry, or in flat sale, or any other margins that may appear in trading relations. So there are things we cannot control. This is not an excuse for the National Bank of Serbia. We do not control international energy prices. We can have some sway in terms of an arrangement where President Vučić agreed with President Putin the delivery of gas at some lower prices, but Serbia cannot control other prices. The government or the National Bank of Serbia cannot do something like that. We cannot affect the prices of stock exchange products. These are stock exchange prices. There are such as they are everywhere and in Serbia as well. But what we can affect, what we can control, is to make sure that the individual interest of a group or a lobby does not contribute to the beginning of the inflationary spiral. You have proof that the National Bank of Serbia is holding the exchange rate firm, but everyone else should also realize that a one-off profit is detrimental to everyone else. I always say I don't want to go into detail, but I cannot but share one interesting detail with you. I believe that you have watched the last Congress of the Communist Party of China, and you probably heard the data that the vice governor in charge of financial markets and innovations in financial markets was taken into custody. A single sentence explaining his taking into custody is that not a single high official of the state may not serve the interests of any lobby groups, but everyone has to do in the general interest. And they say that he didn't uphold the discipline necessary for the functioning of the Chinese economy. I would really like to have this service of, in the general interest, that this is shared by everyone who is in charge of supervision and explaining to others that it is in their interest not to resort to one-off hikes in margins and not to run for one-off profit, because that is bad for everyone. We do not want to dictate the costs to franchises and retailers, but we simply want to see who, if someone maybe doesn't have a measure in terms of the profit that they make. Our competence is not too broad, it is sufficient, but we try not to create excessive expectations from those who think that putting off the repayment of installments could help a lot. Those who are in trouble should go to their banks, should reach out to their banks. I'm not saying that the banks must accommodate them, but I'm sure that the banks have an interest in keeping their clients. I've gone into details, but I'm sorry, everything is intertwined and connected.
Emina Kovacic, N1, you mentioned that inflation will remain elevated. Could you please specify whether 15% is inflationary peak or whether it will continue rising? And can you explain why milk prices went up by 40%? When it comes to milk prices, I will hand this over to Milan or Savo. I cannot claim that this is inflationary peak, 15%, because things are unfolding, that there are many unknown factors here that we cannot predict, not even in the worst-case scenarios. All the models that we have perfected to a significant degree, these models cannot include all these factors. Since if inflation is the average of all prices, where international factors in terms of stock exchange prices and commodity prices, energy prices play a huge role. There is also recession. I wouldn't like it to happen, but it is evident that the euro area will plunge into recession. This significantly affects our export supply towards Germany and Italy. And Germany is already in technical recession. So it would be irresponsible for me to say that this is inflationary peak. We do not expect, according to all the scenarios that we have run through our model, we do not expect inflation in the next 4 months to rise further. It will stay elevated, but we do not expect it to rise by more than 1 percentage point. I'm saying we do not expect. But claiming that this would actually be so is untrue, and it can negatively impact inflation expectations and push them higher. And I always repeat, economics is not mathematics. Economics is psychology and sociology. If you do not believe that this is inflationary peak, but if you read that electricity prices are going to go up by 70%, it is only logical that people will panic. If, based on the interview of Mr. Dugalic, who said offhand it is possible that we will introduce a moratorium, then everybody accepts this idea and holds on to it. And then people cannot deal with this amount of fear. It is up to us to work on containing inflation to the extent possible. I'm talking about the 30% of dinar flows that we can impact. So we did not allow negative interest rates in Serbia. And personally, I am proud that I did not allow this. In spite of all the pressures, savings depositors are now happy to see their interest rates rising, especially during the savings week when savings are promoted. Those people who that have debts are unhappy because their installments are rising. But these rises are not that dramatic. the hype in the media create fears and concerns. Yes, we should adjust our consumption to the current circumstances, but we should not be blocked also by fears, because we will do everything in our power to minimize the effects of this crisis. But you cannot expect from me to say when inflationary peak will happen, but the estimates done by the European Commission, by the International Monetary Fund and the World Bank, all these estimates are similar because we all work with the same information, we work with similar models. We presented to you our data, you will receive a copy of the speech and a copy of the report, and this is everything I can say. I can tell you that we will have a range for growth. We will have a GDP between 2 and 3%. This is the most important for us because GDP is not some concept, abstract concept. It concerns jobs, it concerns salaries. But I cannot tell you anything more. I can only remind you, please don't take this amiss, but I have to say it. In 2012, when I became governor, the key policy rate stood at 11.75%. It was as if it were the only rate based on which money was borrowed, excess liquidity was deposited with the central bank. Banks were not interested in borrowing to the corporate and household sector because they deposited their excess liquidity generated by the sale of enterprises in the privatization process. So they parked this money with the central bank without any risk whatsoever at the interest rate of 11.75%. When I came to the central bank in December 2012, I introduced a new system of mopping up liquidity. We estimated what is excess liquidity that should be mopped up and deposited with the central bank, but not at the cost of the key policy rate. Every bank had to say what was the interest rate it would accept in order to deposit its money with the central bank. They did not know what the entire amount of liquidity that would be mopped up. And within a month, we lowered the key policy rate from 11.75% to below 9%. And when I say today that we are tightening monetary conditions, in April this year we started raising the key policy rate from 1 to 4.5%, but the effective rate at one-week repo auctions has been raised since October 2021. It stood at 0.11%. That is the amount we paid to banks on their excess liquidity because we wanted to stimulate them to lend to corporates, to households, and they supported credit growth in this way and economic growth. From October to April, this effective interest rate, repo rate, was raised from 0.11% to 1%. And when we reached 1%, at this point, we started raising the key policy rate. So I'm talking about my own monetary framework developed since 2012, which enabled the effective repo rate to be 2 to 2.5% lower than the key policy rate. So the real sector, the corporate sector, was borrowing at lower rates, government was borrowing at lower rates, households with dinar loans were borrowed at lower rates, and all of this created room for buying flats, for planning, and for investment decisions. Why am I telling you this today? Now, the effective repo rate hasn't yet reached 4.5%, but it has fulfilled its role. But this creativity of ours to make savings for the government, for households, for the corporates, has resulted in this GDP growth that has doubled today. By mentioning this example, I want to tell you that the National Bank of Serbia will use this creativity, which does not serve the interests of any lobby or any group. The NBS will continue to make decisions and will do everything in order to contain inflation so that we would not see a spillover and suffer from the decisions of other stakeholders. Now Milan will give you the details about the milk prices. I hope I did not bore you too much with these details. I just wanted to remind you of our huge efforts to make life in Serbia easier. You mentioned milk prices. According to our data, at year-on-year level, milk prices increased by 42.8%. But we're not talking only about milk. We're talking about dairy products and all other products that are in the category of unprocessed and processed food. Food prices increased by 23% at year-on-year level, and there are four key factors behind this increase. The rise in the costs of agricultural production, where you had a huge rise in fertilizer prices and wheat and corn prices. Then we also saw a significant rise in the costs of milk, of the producers of dairy products, the costs of milk packaging, cardboard and plastic packaging has increased, and this depends on energy prices too. And the fourth factor is demand. Even in these circumstances, demand is rising. You can have individuals whose food consumption has decreased. Overall demand, based on all available data, is rising, not only in nominal terms, but in volume terms. And it is evident that even at these prices, there is demand for these products, and this is one of the main factors. I have to add something when it comes to the moratorium. I will give you a piece of data. The first moratorium during the corona crisis had the effect of 200 billion dinars because installments were not repaid, and this money stayed in the hands of households, and this exerted pressure on demand. So the first moratorium, 200 billion dinars, the second moratorium, over 100 billion dinars, when the first moratorium was extended by 3 months more. What would it mean today to introduce such a general moratorium at this point, at the time when you're tightening monetary conditions and raising the key policy rate in a bid to contain inflation and to bring it down over the projection horizon and return it within the target band over the projection horizon. So please bear in mind when we adopt in our policy making, we have to consider everything, the effects of potential measures and everything. Alexander Nenadovic, Bloomberg Adria. One question regarding borrowing in the international financial market. I would like to ask you whether it was planned for Telecom to issue bonds in the London Stock Exchange. Or does this mean that the bonds of our government are more attractive than Telecom bonds, because Telecom said it will not tap the London Stock Exchange because there is currently no interest in these bonds? And Since we talked about foreign direct investments and portfolio investments as the investment of non-residents in our securities, we are talking about closing the financial account because of the deficit we have. We are closing the financial account with borrowing in the domestic market and with Eurobond. So when it comes to telecom or any other private company, this is outside our remit. We look at the macro level and cooperation with the government in ensuring buffers against some new potential shocks where the government is the best and the safest payer of all its liabilities. It never lags. It is never late on the payment of its liabilities on account of securities. And like the media want to nicely put it, the government services all its liabilities, including those towards the London and Paris Club creditors. And so we're talking only about closing the entire financial account at the level of the government, and I would not like to say anything about companies, though telecom is close in my heart, because I used to work in telecom. I do not want to talk about it. I'm professional, and though I love telecom, half of my heart belongs to it, I cannot say anything about it. But maybe we should recall what are interest rates now in the international financial markets. But I think that the citizens are mostly concerned about interest rates that affect them and the rise in Euribor. Maybe Anna could elaborate on this, and maybe she could tell us something more about the movements of Euribor and why the citizens are now so worried about Euribor movements.
Thank you, Governor. Just like the Governor said, this is one of the relevant concerns of citizens. But if we look at the dynamics of household loans, housing loans, they were very attractive in 2007, then in 2012. For instance, in 2007, the 6-month and 3-month Euribor, which are valid for our market, were at around 4.7%. After the global financial crisis escalated, they started decreasing gradually until, for instance, 2012, when we had the public debt crisis, and then they rose mildly. Afterwards, they also started declining, and in 2015, they entered the negative territory and remained there until this year. So we have a period of 6.5 years of negative Euribor, and this is mostly the period when housing loans were approved. So it's been 14 years, and this is 1/2 of the longest housing loans. So in this period, the majority of citizens have repaid installments on their housing loans at the lowest interest rates. One more time, it's 4.7%. Now they are on the rise, but this is not unexpected. Like the Governor said, we faced the effects of first in 2008, then the expensive monetary policies, then we had the pandemic. And even if it hadn't been for the pandemic, it would have been quite expected for the interest rates to start rising. Another reminder, I think it was June 2015, the first presentation of the Financial Stability Report, when the governor said that it is expected that in a period of 10 to 15 years, these are financial cycles, it is expected for interest rates and Euribor to start gradually, to start increasing gradually. This is simply part of the financial and business cycle. She said 10 to 15 years. It doesn't mean that they will start rising. So after 7 years, they did start to rise. But if we hadn't had the pandemic, then in this 5-year period, they would also have started to rise. what the National Bank of Serbia communicated to the public even back then, and as of 2018, it obligated the banks that when approving loans, they need to do stress scenarios, which means that if during the duration of the loan we have an increase in the interest rate, how much will the installment increase? Or if there's a shock coming from the exchange rate, for instance, depreciation of the currency, how much will my installment change in dinars? So in this case, I think we even started that conference with questions about the exchange rate. The exchange rate hasn't changed a lot, which is a good thing for households and corporates in Serbia. And another thing that the governor said, in Serbia, we didn't have this policy of the zero floor rate. We didn't have the spillover of the Euribor negative rate on loan installments. So all in all, this was not unexpected, but simply the measures of all economic policy makers, not only in Serbia, but beyond, in the whole world, at the moment are directed to capping demand, because this is one of the mechanisms to fight inflation, and it is completely natural to lift rates. But in our market, this Euribor growth has spilled over to a lesser degree, and interbank competition is another factor why it hasn't spilled over entirely. And another thing is that if we take a look at the entire horizon and how much salaries have been raised in this period, we had a period of significant increase in disposable income on account of these much lower interest rates. If we counted this, it would be a considerable effect. Also, salaries have been increased relative to that period. And if we take a look at the effect of all of this and everything that happened in the meantime in the macroeconomic sense, we would see that indeed this adjustment of interest rates is not drastic, but it is something that is unfavorable. What did you say? Bloomberg Radio. If you want to know, Nicola can also say a few words about interest rates in the Eurobond market. That is, how did Romania and other countries fare when they entered that market? I'm looking forward to the bankruptcy of the cryptocurrency exchange dealers. There will always be those who believe in novelties and easy money, money without any work. But I'm glad that in these globalized flows, we have quick news about bankruptcy of those all sorts of companies that try to build money that is unsupervised by central banks, that is unregulated. They want to make huge profits without any risks to the owners. Well, such perpetuum mobile is not possible. It can only be done by alchemists, you know, those who make gold out of nothing and so on. Speaking about the Greens, on Thursday we will have a conference with the provincial government. We are working with them about green bonds and sustainable financing. It's called promotion of investment, where there really is a general interest to save energy in a moment when energy is indeed expensive and is hard to get without political influences and maneuvers and shortcuts. So there will be a statement, a press release about that. A conference will be held in order to help the local self-governments and everyone else who is interested in this type of investment, because we need to save energy. We are living in times of energy savings. Somebody might say it's easy for me to speak about savings, but trust me, with my 62 years of age, I have been and I have remained just a common person who lives like everyone else. I don't just say words just to say them, but I do try to do with my associates everything so that my deeds speak for themselves, and that we can all overcome these hard times in solidarity with each other. If there are no more questions, thank you all. I apologize for these lengthy talks. We don't see each other often, so when we do, I tend to talk at length. Thank you all for your attention.